What's going on, guys? Edward here, back with another video. I just have a really nice strategy here, guys, for you to actually follow. It's basically a 5 minute time frame slash 15 minutes. So basically, between the 5 minute and 15 minute time frame, it's a scalping strategy for US30 and using the TP indicator, which is the 12, the 30th, and the 100. This is a WMA line. It's called weighted moving average. Simple. You can just go on the indicators and just type in WMA, and it's gonna be coming like this: WMA 3-987. Okay, this is the creator. You can put it a little star right there as your favorite. So and of course, you need to know, you need to understand or have an idea of what price action is and how price action works. Okay, without price action, this is not going to work if you don't know. Okay, now there are some days, I have to make this clear. There are some days where you're not going to be able to trade because maybe there's, like right here, it was ugly consolidation right here. We're going to be paying attention to the New York Stock Exchange, okay? Especially for this strategy, all right, to follow. So you only going to be trading this setup or this strategy at the New York Stock Exchange, okay? Or maybe a few minutes before it opens, okay? Right now in my country, it opens at 9:30 in the morning, 9:30 a.m. So I have to know and see where the market is positioned in order for me to make a decision either to buy or sell, okay? Now, as I mentioned, you need to know where you're standing. You need to know at least your zones, okay? And I highly recommend this. I write I draw my lines on my support and resistance on a 4 hour time frame at least, okay? Um, I like that time frame to draw my support and resistance. Sometimes I do it on a daily, but I rather do it, or more often than not, I actually do it on a 4 hour. So that to me, it's a fine. It's a good time frame to set your zones, okay? Because they are, you know, that that's a very strong zone. By the time you're going to be scalping on a 15 minute or 5 minute, you're going to see where the price is touching. For example, this white line right here, this is a big ass 4 hour zone. So by the time the market reaches this zone, you could have an idea like, why would you sell when you are in a big support, right? It makes sense. When you are in a 5 minute and you know you're touching a 4 hour zone, why would you sell? If anything, you would buy. You would actually be looking for buys. But also having understanding what is happening at the moment, what if there are going to be some type of news or not, or what's happening at the moment. So the idea for this basically is that some days you may not be trading, you may not be, the market could be giving you nothing. Basically, it may be a lot of noise, so it's not going to be attractive at all. Okay, I highly recommend you trading on a 5 minute if you're seeing a very nice uptrend. But if the price is horizontal like this, the price was just not doing anything horizontal, and we are trading below the 100. Okay, the purple line is the 100. Let me highlight it here. So you have three lines in this indicator for the TP strategy. You have the purple, which is the 100, the red line, which is the 30th, and the blue line, which is the 12th. Okay, so basically it means that when we are below the 100, we should be looking for sales. Okay, and when we are above, we should be looking for buys. But you have to have, as I mentioned, idea to where you're standing. We are in a big support, right? 4 hour support, and we are below at the same time, below the 100. So would you go on a sell right here, or what would you do? Because I'm on a big strong support, I rather trust my support in this type of scenario. I rather trust my support in a 4 hour zone because it's much stronger, okay, than actually scalping on a 5 minute. So this maybe right here, it may not be a good day to trade, right? If you're looking that you are in a support but you are below on a 5 minute time frame, you are below the 100. So it's basically like the support is telling you to buy, but the indicator is telling you to sell because we are below, right? So it doesn't make sense. It's not the confluence we're looking for. We're looking for, like, I don't know, let's say maybe right here the price is actually breaking right? So it's a good position to buy because it's breaking a very strong resistance in the past. It's breaking it, so it makes more sense to buy. You see what I'm saying? So I want you to understand that try to look for those confluences to go in the same direction. But depending on the day, it's going to be crazy. It's going to be very volatile. You may have to skip it. So let's say we didn't like to trade here at this point. It was good, no problem. We'll skip it. This is the previous day. This was the previous day, right? Using price action, guys, using price action, you need to know, as I mentioned, where you stand. This could have been a nice trend right here. The price broke the trend and it started to come below the 100. But you see on a 5-minute time frame, you see this big momentum candle. This happened before the New York Stock Exchange actually opened. You see this blue line. This is when it opened right here, this candle. So let's say you would have wanted to get in on that after that drop happened. You got in there, right? The stop loss, you have to put the stop loss above the 100 line, okay, which is normally above the previous candle, right? This is a scalping strategy. This is normally like 1 to 2 risk to reward, and you're out. Normally, just a few pips, and you're out. Okay, even though this drop was really nice, and right here the risk to reward was actually 1 to 2, but you had 134 pips, and you were risking 67 pips. Nice sell. It makes sense. Why it makes sense? Look at this. The price is rejecting. If you go in the past, you see the price is touching a very strong resistance in the past, and now is coming down, is breaking your trend, and now it's coming below the 100. You see, everything makes sense. That's what I want you to do. Everything has to make sense. Don't go against the trend. Try to, if you know that it broke the trend and now it's coming below, and the market, you see, there's about like what, 5 minutes for the New York Stock Exchange to open, and already this momentum candle right here is going to the downside and already breaking the 100. You're in. There's nothing to think about. You are in right there aggressively. As soon as that candle closes, a stop loss above, and you let the market open. You wait for the market to open. The market did pull back, but you see, in not at the time it broke or came above the 100. So it was a really, really nice sale right there. Quick entry, just a few minutes. All right, let's go on the next day, right quick. This ugly, ugly. Stay away from this. Right? You might say, okay, maybe there was some type of opportunity right here because you were seeing actually a flag. Maybe the flag was somewhere right here. When you see that the market is acting, this is a lot of volatility, a lot of crazy momentum. So I'm not sure why it's not letting me clone. I don't know what the heck is going on. Anyways, but you get the point. This right here is a channel. Basically, it's a bullish flag. We broke, came back for a retest. This big momentum right here, this could have been a nice demand zone. So you see, I'm using more confluences right there. But at this point, you see where the lines are. You see all this in indecision right here. All this, the prices open down, open down. Maybe this was not attractive to you, and you stay away from this, or because it broke already your channel. Let's say you would have entered on that position, right? You enter in there, the stop loss below the previous low, right here, and you go 1 to 2. All right, that would have been a nice buy. You entered on the breakout of the flag, right? The price was climbing on top. You are on a support, right? Price broke. It did came down. This was crazy day. The adrenaline would have been mad this day. Um, and but at the end of the day, the price actually ended up pushing up. But it was a nice setup right there. If you would have rather just skip it because you were seeing the line, the 100 line here, the market is just open down, that's fine. If you don't want to trade it, that's fine. You don't want to trade that day. This was a really nice day. You see that already the price, we are on this nice uptrend already. So the price is also breaking a previous structure. It broke right here, it retested, and then it started to push up. So at this point, as I mentioned, you can make the entry. You can make the entry a few minutes before the New York Stock Exchange is going to open. So let's say you decided to go high on this one, on the next candle right there. You put the stop loss below the moving average, okay, the 100 weighted moving average, or if like price action, the price broke right here. It broke this resistance, retest, and now it's pushing up. I would maybe do it. I would put the stop maybe the stop loss maybe here, or to go safer, you can put it below the 100, and you go right here as I mentioned 1 to 2. It's a scalping strategy, guys. You don't need to get many pips right there because you're looking to get in and out. All right, 1 to 2. Let's see on the previous day. What's happening right here? You're starting to see now the rejection first, right? You go in the past and you're starting to see this resistance right here, the price being rejecting. The price is coming down. It's breaking below. You see, it's breaking a lot bigger, big momentum right there. You can say this is also a small demand zone right here. The price broke, retest, and melted. So let's say a few pips before. Pay attention to price action. The market is rejecting this resistance. It's breaking the 100 moving average, breaking it, retesting it, and drop right here. So a few pips, maybe not a few pips, a few minutes, let's say 1, 2, 3, 4, maybe 20, 25 minutes before the New York Stock Exchange is going to open, you can already make a decision right there. You could have made a decision maybe right here. You enter on that momentum candle to the downside, your stop loss above the 100, a few pips above the 100 line, and you go 1 to 2. All right, simple. This could have been a nice real sale, but you see that it makes sense, guys. It makes sense. I'm going on a rejection. I'm showing already the rejection on a 5 minute time frame on that resistance right there. The price is breaking below the 100. I'm going with the momentum. So I'll go with the momentum, a stop loss above the 100, and track it, right here. Ugly day. Ugly day to trade. Skip it. Don't trade. You don't have to force it. If you see the market going horizontal like that and the market is just going up and down and there's nothing right here, you can even try to draw support and resistance. There's nothing. It's looking ugly. Stay away from it. Don't trade. Right? I try to stay away from this shit. I don't like that. I rather stay whenever I see at least that the lines are separated and the actual price action makes sense. The market is actually having a clear direction. You see price push, pull back. You got to push, big momentum breaking previous high. It comes back to a retest several times. So right here, it would have been actually a nice buy. And you see price also looks like it's getting on top of this resistance. Now price is climbing. So let's say you decided somewhere here, you decided to make the buy, right? Before, a few pips, a few minutes before the New York Stock Exchange is going to open, you are on top of the 100. The price broke a previous zone right here. It's consolidating, but you are on top of the 100. You see, everything, it makes sense to actually buy. So you go 1 to 2. Just a quick in and out, about 46 pips. The price did push up stronger. I don't even care. If you're looking for just scalping right here, it's a nice risk to reward because, as I mentioned, the volatility when the New York Stock Exchange opens, it could just push and woof and then go against you, or just do a push down and then come back and then continue pushing up later. But it's going to try to go crazy sometimes. So try to stay away from that. Right here, also another position. This could have been a little tricky for maybe new traders, but this was a nice reversal setup. So I would have entered, if this is a small resistance right here, a small support, I'm sorry, I would have entered on the breakout. I would have put my stop loss below the zone, and I would have gone 1 to 2, right? I would have normally done that. But you might say, hey, but Eduardo, you're going against your, the WMA lines is, we are below, and at least the support is telling me to buy, but the indicator is telling me to sell. So it's kind of like, 50-50 chance. If you don't want to trade this way, if you see this 50-50 chance, don't trade. That's it. Skip it. If you want to follow your guts in price action, I rather recommend you following your price action than the actual indicator, which is kind of stupid. I'm telling you now that I'm telling you this now, but yes, it makes more sense sometimes to me to just follow price action. Is the strongest thing right here. But it's still, if you don't feel comfortable, since you're a new trader, you don't feel comfortable with this type of setup, skip it. Right? You look for an actual uh, trend line. So right here, also looking in the past, the price broke this previous resistance. It broke it, came back for retest. We were below the 100. So this is tricky again, another tricky entry. But I would personally love to get in this with this trigger right here, this three candle reversal. I would get in there and 122, 122 risk to reward right there. Nice setup also, but it's going against kind of like as I mentioned, we are on a support which is telling me to buy, but we are below the 100 which is telling me to sell. So what should I do? You know, but because I already know price action, I know this thing. Uh, I would definitely take the risk right here to go on a 1 to 2 risk to reward once the price is testing a previous zone. It's a very tight take profit. It's a very quick scalp. Right here, nice. Again, you see the price is starting already. We are already on an uptrend, right? So you could say also that, okay, right here, there was some type of little support slash resistance. The price pushed, pull back, and shoot up. So aggressively, if you see that the price is pushing up and the market is about to open, I would go aggressively. This right here, it's an aggressive movement, or you could wait for the retest if you are a little bit more scared, but you can still put the stop loss below the 100 line and go 1 to 2. All right, that's basically it, guys. That's basically it. Now pay attention to this. This is a 5-minute time frame. Let's go on a 15-minute time frame, which this is where you can also spot some really good movements, and it will make a lot of sense right now on a 15-minute. You see that what we did on a 5-minute, we always were on top. You see that we were looking for buys, we always were on top of the 100 line. You see, market is on top of the 100 here, is on top of the 100. Right here was kind of like starting to get horizontal, so it was a tricky entry, but still it did push up. Right here we were looking for a buy. You see, we were on top of the 100. Right now, you see when the prices starts to go down, you see this nice sell. It would have been like a trend line right here, maybe a small trend line. The price, price broke and went down. So it broke also. We were below, you see, the 100 right there, and it was a nice sell. Back here, we were on top, on the 15-minute, we were on top of our 100 moving average. And you see, we look for that nice buy. So it basically is telling you that every time the market is on top, we should be looking for buys. And when the market is starting to climb below, we should be looking for sells. So 15-minute time frame is telling us, and giving us all those confirmations. You see right here, the sell, every time price was below, good, nice sell right there. Right here, the price was below, but we were touching that 4-hour zone, which is a very strong zone. That's why it was maybe a day that you can skip, maybe, or trade later. Maybe not at the moment when the New York Stock Exchange opens, but trading maybe later, a few hours later. All right. But that's basically it, guys. I hope you like this type of a strategy. If you like going with the momentum by the time the New York Stock Exchange opens, I recommend you checking those two time frames. 5 minute to make the entry, 15-minute to check if you to give you that confirmation if you are in fact on an uptrend or the price is going horizontal in a consolidation like right here. Try to skip it. Okay, if you feel scared, if you don't feel like it, skip it. Right, nobody's putting you a gun into your head to make you buy or sell. All right, that's why you can use this and you either US30, Nasdaq, or S&P 500. um, but I hope it makes sense. If it's necessary, watch this video several times so you can understand. If you are one of those person who like only trading on the New York Stock Exchange, you can do this, but having in mind that when the market is like this, parallel, it's horizontal, can get crazy. It can get a little crazy. So it's your choice, right? So I hope it makes sense. Again, guys, please subscribe. Give it a big thumbs up if you like this content. It motivates me to keep pushing and posting new videos more often. Follow me on Telegram if you're interested. I post content in there every single day. Also, check out my website if you're interested on getting the course, mentorship, and signals for life. Again, thank you guys for watching. See you guys later. Take it easy.